Alrighty, as promised, I am getting y'all a review. It is January 2nd, 2024. We are finally into the new year, 2024. Really hoping to kind of take this year, teach as many people as possible that are my model, and just try and make as many people as profitable as possible. But getting into this, like I said, this week I probably am not going to be trading. I may dabble with some evals tomorrow that I have. But no live funds will be traded, no live PAs will be traded. I kind of want the market to kind of get its footing and kick us off to a good start to 2024. Like I said, it was, or not like I said, but it was nice to actually see some good volatility back in the market. This is what I'm used to. These kind of moves where they last like 30 to 45 seconds for like 18 points are exactly what I wanted to happen, or at least see on this first day. There were some really, really good opportunities. There were also some great examples that I kind of want to show you and kind of explain how I use 1 minute structure in alignment with the 15-second scalping model. So obviously, I want to kind of go back a little bit. If you are using the 30-second, I'd say use the 5 minute as your structure, but keep the 1 minute in mind. If you're using a 15-second, prioritize the 1 minute, but sometimes keep the 5 minute in mind. If it's super obvious, like if there's a big 5 minute for value gap, that's sometimes when I'll market, but I let the 1 minute kind of tell me the story, tell me where I should be engaging in the market, and kind of pivot from there. But first off, like I said, there was some really, really, really good volatility in the market today. This is one of those days where I am fine with trading before 8:40, just because there's so much movement that it's kind of a no-brainer if a setup presents itself. Due to the fact that 9 times out of 10 I wait for 8:40 because a little bit more volatility comes in the market, but when it's already there, you that's kind of more so up to your discretion. Like I said, if you are new to this, I would 100% recommend just strictly trading those time windows. But once you get the hang of it, you can obviously kind of see, you'll get some more screen time. You'll be able to see when the market is highest probable. But with that in mind, I do want to go over a couple setups that were before 8:40. So obviously right here, I really want to be, I don't know if these are dead equal highs. So these aren't dead equal highs right here. So this is still valid. The only time I will kind of caveat away and not take a setup is if they are perfectly matched. So obviously right here, what do we get? We get some nice displacement right here. We can kind of identify this as our manipulation leg on the higher time frame chart. I'm gonna pull over the 1 minute chart a little bit more. You can see it right here. We cleared all this buy side up here. These equal highs over here, I'll go ahead and mark those out. Actually, we didn't clear those. I thought we did, but still, keeping in mind, understanding market maker sell models, market maker X models, both buy and sell. Should have just said that from the get-go, but right here we can kind of identify this as our manipulation leg, especially once we close below these up close candles right here. That's our CISD. Like I said, you kind of want to have, it's not necessarily needed, but me personally, I like to not know exactly, because the market's just a game of probabilities, but have a high confluence and a high confidence of where the market is likely to draw. And when I see these specific signatures in price, I know where I should and shouldn't engage and where the price is likely to go. And in this scenario, once we got a clean closure below this, I was like, all right, this is looking like a higher time frame market maker sell model. And I kind of want to identify key liquidity points of where we can target, where I should be scalping my way down to. And obviously right here, you can see we have these dead equal lows right here. This is obviously going to act as a magnet for price. So with that in mind, I kind of want to go ahead and get into this first setup right here. So obviously, and I have to say today, the precision was beautiful. Very, very, very little drawdown. That's something I really, really like, and I kind of want to get some more data on is setups that are highest probable that are going to hit targets with high confidence. A lot of times they won't go past 2 to 3 points. And if I can kind of critique that and take that down a little bit, we're looking at like if I have three, it sounds dumb, but it's true because I have so much data on this. That's a 6-hour trade if you're going for 18 points. So that's something to keep in mind. that I will obviously update future wise. But going ahead and getting into this first setup, obviously right here, it really depends. Sometimes I've had cases like this where it's tapped it to the tick perfectly. Sometimes it will fill me fully, sometimes it will fill a couple contracts, sometimes it won't fill me at all, but I still want to cover it because it's a beautiful, beautiful setup. Obviously we have an order block right here that's going to support price and sender down. So obviously we would have been tagged in right there at that bottom yellow line. This one just absolutely melted. Would have gone break even, obviously at 6 points, 12 points, pulled off another one, and then 18 points full close. So with that in mind, obviously, like I said, this is before 840, but when there's enough volatility, I'm fine with engaging just a little bit before. So obviously that would have been a full TP3W, 18 points, can't complain. 18 points a day keeps the doctor away. Or the 9 to 5 away. I'll say that. They'll say that. Just 18 points. Just 18 points. So getting into the next one right here, obviously we have this little low put in right here. We can also consider this a CISD2 with these up close candles, also an order block. Once we close below that, I'm looking for that to support price and send it down. Especially when we're this close to all these equal lows right here. This is such an obvious. I will take this 10 out of 10 times. This is one to study. If you're keeping liquidity in mind and we are this close to like some equal lows or relative equal lows, no brainer. This is something I personally would risk heavy on. Sounds dumb, would not recommend for newer traders, but if you're more experienced and you know kind of with a very, very, very high conviction that we're gonna go down to these lows, no brainer, no brainer. I would not mind bumping risk on that. But with that in mind, obviously we have no fair value gaps up here. We mitigated this fair value gap right here, displaced back down off of it, got a clean break below that low right there, and obviously another break right there with our baby little fair value gap right here. Right there we would have also been tapped into the tick. Like I said, not completely sure if this would fill you. Sometimes it has, sometimes it doesn't, but this one was only 30 seconds. So actually 45 seconds for another 18 points. And then right after we had another clean setup, obviously we had this quote unquote low right here. I identify this as a low. You may or may not. If you have a little bit more screen time with this, you'll see what I'm talking about, that this will happen a lot. Obviously we displaced below right there. Another one tapped to the tick. Like I said, these yellow lines are here for a reason. They're not random. They're about as precise as you can get with fair value gaps. So obviously we'd have been tagged in there on the second candle. Would have came down, hit a full 18 points again. Very, very clean move. And here is where we're getting in some examples of what I mean by using the 1 minute time frame to your advantage. So obviously right here, you really shouldn't be looking for really any shorts because we have these equal lows up here, but more so I'd be entertaining longs. However, if you look on my screen over here, I'm just making sure it shows, this is a 1 minute chart on the left that you can see partially pulled up right here. We have a bearish 1 minute fair value gap right here. If price is in a sell program and not ready to change its state of delivery, I'm expecting these to get respected. And as you can see, we get a little clean long setup right here. But with that in mind, you should not be taking this entry. Why? Because you're trading against order flow, you're trading against structure. You should never be longing inside a bearish fair value gap. Vice versa, you should never be shorting in a bullish fair value gap. You want to wait for some confirmation. Obviously, in those cases, I like to either see it traded through, like Ryan's inverse fair value gap model. I will use it as confluence if I see bullish or bearish, in this case, bearish PD arrays getting disrespected, and vice versa as well as that. I'll also use CISDs. But with that in mind, obviously, like I said, you should not be looking for shorts anyway because of these equal highs up here, and we are approaching the -2, -2.5 standard deviation. If you saw my video, I think it was one of my previous ones, you would understand what I'm talking about. This is key. I want to say it's really key, but if you want to get as precise and know when to and when not to engage in the market, I would highly recommend that you begin studying standard deviations, how to spot them, etc. There are some great videos on YouTube, but besides the point right there, so obviously this area we can sometimes expect, or in most cases we can expect a little short-term reversal. Once I saw that with these equal highs up here, I was like, all right, market should theoretically reverse up here, come up to that, but fortunately we did not get any clean scalps up to here. Just went ahead and took those equal highs, and then following that we had a pretty clean 15-second scalp model right here. Obviously we have our break of structure right here, broke that low, we got a clean little fair value gap right here, and this is something I like to use too. So I say never short in a bullish fair value gap. This is where this comes in play, is how much room do we have until that 1 minute bullish inefficiency, right? We've already closed through this 1 minute fair value gap up here, but we have another one that's probably halfway in discount of the range, right? So from there, I'm measuring, I'm like, all right, how much room do we have to move down into that? Because fair value gaps are gonna act as a draw if price wants to flip and continue order flow going bullish. So I'm expecting these to be or act as a magnet for price. But with that in mind, like I said, I'm measuring how much room it has to at least reach into that fair value gap. So as you can see right here, in this case, we would have been tagged in right there. There is 12 points right here. So that's TP1 if you're going break even at 6, or TP1 if you're taking one off at 6 would be right here. So obviously in this case, there's enough room that I have a high enough conviction is if price is going to go 12 points, that's fair enough for me because that's technically a 1-to-1. But I will leave a runner obviously for 18 points, which lined up with the CE of that 1 minute bearish inefficiency or bullish inefficiency. So with that in mind, that's something I like to always note is I like to measure if there's enough room. Like, so say if this was like right down here and we had a scalp set up right here and it was like 3 points away from the bullish 1 minute fair value gap, I would not take it. I would wait. There always has to be enough room for it to reach down into that because like I said, it's going to act as a magnet for price. And I believe we did have one or two more that I was really a big fan of. So this one, I was surprised that this did not continue down further. I really wanted to see this one reach 18 points, but obviously it didn't. So this is technically my A+ setup. So if you're still watching, I would take notes on this. So obviously we have this bearish 1 minute fair value gap right here. We come up into, obviously no scalp setups right here, displace off of it hard, and we get a scalp setup presented right here, right? So obviously we break that low right there. We would set a limit at the bottom yellow line. And as you can see, we would have been tagged in on that first candle. This one absolutely just melted right away. It did only go 12 points. Like I said, I was really surprised when this did not reach all the way down to 18, just given where structure was going and how we were starting to flip back over up here into a sell program. But with that in mind, this still technically hit 2 TPs, which is a very clean setup. I was a big fan of it. And obviously we did come up here, took out some liquidity right here, and then just melted. So this is something I want to keep in mind. Right here, I believe I actually missed, unless I'm missing some equal lows, because this is the first time I'm really reviewing this from this morning, but it looks pretty clean to me. Obviously, we mitigated these for value gaps right there. Don't see any equal highs up here. So in this one right here, we were displaced below that low right there. Would have been tagged in, right? Oh, I think I know why I didn't like this one. So obviously we have some relative equal lows over here, as you can see. I'm trying to see if I can zoom in on the 1 minute. That's why I didn't have this one marked. This is kind of a one for me. I personally would not have taken it, but I still want to kind of go over it and explain why I wouldn't have taken it. So obviously we did close above this high right over here, and we had this bullish 1 minute for value gap. Yeah, or no, this is actually no. This would have been quite beautiful actually. This is after we closed below it. So we closed below it over here, so in turn turning into an inverse fair value gap. And right then and there, we would be seeking possible shorts just because price is in a sell program. Obviously, bearish PD rays are being respected. I still probably personally wouldn't have taken this because right before we would have got an entry, we would have taken that low right there. So, but like I said, still want to cover it. This is a pretty nice framework or a picture for the 15-second scalp model. So obviously displaced below that low right there, had a baby low for value gap right there. We can deem this as a order block right here. would have been tagged in right there, and then this one did melt at 18 points. And I actually did like this setup right after. That's why I had it marked, because when I saw this, when we displaced through this low with speed and like strong movement, I was like, all right, we are likely to continue down, possibly down. I haven't even checked if we hit, no, we didn't hit the 4 standard deviation. But I was like, all right, if we're gonna displace through that low, or that quote unquote liquidity point like that, I'm still anticipating price to continue spooling to the downside. So obviously right there, we displaced below that low, would have been tagged in. I don't know if this would have filled or not, but still a pretty picture perfect setup. Obviously this one would have been tagged in there. I really don't think that would have filled, but still a good setup to cover. And this one did go 18 points. I know some people are moving their stops to 6 points after I think 12's hit. I personally don't do that, because like I said, I have enough screen time with this. I've seen this after it's reached 12 come up a little bit near 6 points, and then absolutely reverse and then just dump to 18 points. That's personally why I don't. Obviously, if we had taken out a key liquidity point, I will sometimes move it, but more cases than not, or more so than not, I will not move my stop to 6 points after 12 points is hit. So obviously with that in mind, this would have hit 18 points, but like I said, I don't think that would have filled. And I believe, like I said, we actually got quite a few setups today. So this is something I want to cover. Where are we in the chart? Down over here. So this is actually just a plain Jane. We caught a manipulation leg right here. Obviously no equal highs over here. We had a little 15-second, almost looks like it, 15-second market maker sell model. Obviously we are still in a sell program because we're respecting on the 1 minute bearish PD raise. So with that in mind, obviously we had this little, I believe Art took this trade as well. This was textbook. This is beautiful. So obviously right down here, we have a bunch of stacked liquidity right here, so we could deem that as a target. Ignore these lines because that's a standard E. I'm just gonna go ahead and delete it. But like I said, with that in mind, we do have a bunch of key just stacked liquidity right here. So we're like, all right, and we're still respecting. I wanna go ahead and draw this 1 minute bearish inefficiency over here. Obviously we are still respecting this, displaced out of it with speed. And then we get a little scalp setup presented right here. I'll go ahead and draw it out right there. This one would have been pretty nice. We only took 3 points of heat, 3.25 points of heat before it just absolutely melted down, inducing all these lows, taking them all out of the marketplace. But that was another very good setup this morning. And this is another one I want to cover. This is not a valid loser. Why? Because obviously this is very clearly the manipulation leg of where we're beginning to flip back up and go bullish. And when we close above this 1 minute fair value gap, as you can see right here, just want to make sure it's shown right there, we close above it on the 1 minute. So in turn, like I said, I use Dodgy's inverse fair value gap model as confluence. When I see this, I'm like, all right, if a scalp short presents itself, I do not want to be taking that short because we just closed above a bearish inefficiency, meaning the market is likely going to turn and seek buy side liquidity. So when I see that, I'm like, all right, I more so want to entertain scalp longs, not scalp shorts. Obviously, if you aren't using the 1 minute as confluence, you would have probably got caught up in this. But in my eyes, this is not a valid setup. You're trading against order flow. While it does look like order flow is bearish right here, when we start disrespecting bullish PD raise or bearish PD raise, price is likely to begin flipping and, like I said, seeking buy side liquidity. And I believe, so obviously we have 10 a.m. right there. I believe, yeah, so we did have some equal lows down here. That's why I did not like this scalp long right here, even though I still think that would have, no, that wouldn't have tagged us in. But like I said, this is something I'm still trying to kind of go over previous data on. This actually would have been a pretty nice scalp long, but that was before we closed above that. So obviously with those equal lows, like I said, I'm still trying to gain some more data on what ones I should really care about. For now, I know ones that are in fair value gaps after we mitigate a fair value gap or something, those can kind of be refrained from. And you don't really need to pay attention to those as much as external equal lows. This is something I wouldn't like to see But if I see price displacing far away from it, that's kind of when I start leaning against them. I'm like, all right, if we have room to reach up to the upside based on standard deviations, obviously this is that manipulation leg. Like I said, we can use that to frame a standard deviation off of. And I do want to mark that again because I'll show you why I use these, because they add quite a bit of precision. If I can get this to cooperate, goodness gracious. So obviously that's our manipulation leg. That's how we draw our standard deviations. You want to use the manipulation leg. That's sometimes hard to spot, but once you get some screen time with it, once you get used to it, it's going to be very, very easy to frame it and use it to your advantage. But like I was saying, why do I use them? You can see this -1 standard deviation right here. Market top ticked it exactly and reversed off of it. So with that in mind, like I said, once we start getting away from equal lows like this and we close above all these down close candles up here, I'm like, all right, those are more than likely going to be safer later. And I'm not too worried about them right then and there. So with that in mind, obviously no good scalp opportunities right here. There actually is a scalp short right here that I do want to cover. Like I said, never short in a bullish 1 minute fair value gap. You want confirmation. You want to see if we disrespect it. If we respect it, flip and see or seek scalp longs. I don't know why that might be like a 30-second. Or no. This is the one I wanted to cover. Why this is invalid. Like I said, right here. Let me draw on the 1 minute chart. On the 1 minute, we didn't close below that at all. It looks like we technically did close below it on the 15-second, but like I said, let the 1 minute paint the framework, paint the picture for you, and tell you what's being respected, what's being disrespected. So with that in mind, when we have a strong wick like this and don't even come close to closing below that, not to mention prices in a buy program, because we are at the beginning stages of a market maker buy model. I know this is going to sound really confusing to y'all, but like I'm trying to make it or dumb it down as simple as possible, because if you just use 1 minute structure, you'll be just fine. Like I said, I just like being as precise as possible. That's who I am as a person. I like to be precise, know where the market's likely to go. But besides the point, like I was saying, you never want to be shorting in a bullish inefficiency. So with that in mind, obviously, had you been caught in this trade, you would have been tagged in there, and this one did come up to 12 points. But like I said, if you're using the correct framework, you're trading this model correctly, you should not have been in this to begin with. So with that in mind, I do believe, this was another clean little one. Right here, we were continuing to hold this 1 minute bullish fair value gap up here. We'd yet to reach buy side up here, and we would have been tagged in on this one. Obviously, we displaced above, where is it? This little high right here. And no, these are not equal lows over here. They're relative equal lows. I care more so about exact, like I was saying earlier. So obviously, we do have a little bullish fair value gap. Tiny one, but we would have been tagged in right there. This one did reach 11.75 points before reversing, so technically we would have only pulled one off or gone break even at 6, but this is still technically a winner, like I was saying. And I believe that was the last one before 10:30. Something I want to note is when we're getting this kind of volatility in the market, I'm really only going to entertain the silver bullet hours, or just strictly the hours that I've given y'all, minus market open in most cases. But I'm not really interested in trading this over lunch, because when we're having volatility like this, everything's about to start making sense. The rules I have in place with like equal highs, equal lows, if there's enough room for it to reach up there, I still will not take it, because the frequency of this is high enough that it doesn't bother me if I miss a setup, even if it goes to TP, because there has not been a single day this has not had more than 2 to 3 setups ever. That like everything I have data on, there's been a setup every single day within the hours I've given y'all. So it's your job to put the time in, put the screen time in, get a better understanding of structure, know where the market's likely to draw, understanding, like I said, you don't have to, but MMXM models. If you do have a good grasp on that, your win rate is probably going to be high 80s, possibly low 90s. From what I've been seeing these past couple months, it's been pretty crazy. I will say that. But like I said, with that in mind, 1030 obviously closed right there. And I believe that was all the valid ones that were in alignment with structure. Obviously, like I said, I covered those two that if you would have got caught in, they were against structure, but those are good key learning points. Obviously, a red day is not a bad day, as if you learn from it, you're always going to continue to get better. They're just expenses that you have to give to the marketplace. If you truly want to succeed in this, you'll understand that, and you'll just use them to your advantage. Use them as fuel to grow as a trader. But like I said, with that in mind, I do got to make dinner here in a minute. Pretty hungry. Got back from the gym a little bit, even though I ate about an hour ago. I'm already starving again, but besides the point, I just wanted to get this video out to y'all tonight. Like I said in that tweet the other day, that structure video is coming soon. I'm gonna try and get that filmed tomorrow. Should be good to go. And I genuinely, that's gonna be one of the most important videos that y'all need to watch. I kind of went over a little bit in here, but stay tuned for that, and I will catch y'all in the next video, likely tomorrow. Peace.